Hello and welcome. You're tuned into Market Fatafat with me, Ankita Saxena, and with me, as always, is Snehi Shah. And this is the show where we take you through all the stocks that are buzzing away in trade, either on the back of news flow or on the back of technicals. But first up, let's see how the markets are panning out. Well, it's a Good Friday coming in on this D Street, Snehi. 10 consecutive days of blowout and finally a respite for the markets. We are heading towards 23,700 on the Nifty at least.
Absolutely, Good Friday is the best way you could have summed it up, Ankita. Good afternoon to all our viewers as well. And let's take a look at what the markets are doing as of now. Remember, we did cross that 23,730 mark on the Nifty. We've come slightly below that, but not much to worry about because we're still very close to 23,700 and almost a 1.5% uptick coming in on the Nifty. If you take a look at Sensex, that one has been soaring away more than 1,000 points higher on an intraday basis is where Sensex is. 1.4% gain on that front as well. India Week seems to be in control as of now, 1.3% spike, but not much to worry about. Nifty Bank, a very good performing sector today, 1.1% uptick coming in on that front, a 550 point uptick as of now coming in for Nifty Bank as well. If you take a look at what the broader markets are doing, very strong show of support coming in from the broader markets as well. They're also doing pretty well. You have 1% uptick coming in almost across Nifty, mid cap and small cap as well. There you have it. Let's take a look at some sectoral gainers and losers right now. You only have one sector that's not participating in this cheerful rally, and that is Nifty Media. That's down 0.2%. However, PSU banks almost up 3%. Your big winner in today's trade, followed by Nifty Realty, IT, Energy, Metal, FMCG, Bank, Auto, Pharma in that pecking order. So barring Nifty Media, you have all the other sectors that are in the green, led by the PSU banks. Just quickly taking marking some Nifty gainers and losers. Only 3 stocks from the Nifty 50 pack in the red right now. 47 strongly in the green. SBI, Tata Consumers, Ultratech, Bajaj Finance, Grasim. These are the ones that are leading the gains for the Nifty.
Alright, let's get you some more stocks that are buzzing away in trade then. And for that, we are joined by Nilesh, Jain, who's the head of derivatives and technicals research, Centrum Broking on the technicals. And from our research team, we are joined by Jain. Hi, thank you so much, gentlemen, for joining us. Good afternoon to you both. Let's get started with all the stocks that are in focus today then. MGL or Mahanagar Gas is in focus today. In fact, the shares gained as much as 4% today after the city gas distributor announced a hike in prices for the compressed natural gas or CNG in and around Mumbai starting today to pass on the impact of the increased costs. Now, Mahanagar Gas will increase the price of delivered CNG by 2 rupees per kg. Following this, the revised delivery price, inclusive of all taxes for CNG, will be 77 rupees per kg in and around the country's financial capital. Now, MGL has last increased the prices in July this year by 1.5 rupees per kg, and the price hike was due to a reduction in the domestic gas allocation to city gas companies. Now, MGL has now raised the prices by 2.6%. Now, city gas distribution companies will need to increase prices by 8 to 10% to fully pass on the impact of rising costs. But on the price hike news coming in from Mahanagar Gas, it's trading with gains of 3.2% right now.
Okay, so that's MGL for you. This stock is gaining in today's trade. But let's also take a look at another big winner in today's trade, and that is Raymond. Now, this stock is up roughly 7% following the receipt of a no objection letter from BSE and NSE for the demerger of and the listing of its realty business, which is called Raymond Realty. This milestone comes 2 months after the company's completed the demerger of its lifestyle business, marking another restructuring within the Raymond Group. Now, remember, the board had approved the demerger of Raymond and Raymond Realty on the 4th of July this year as part of a strategy to unlock value across all its businesses. Post the demerger, both entities will operate as separate listed companies. Upon receiving shareholder and regulatory approvals, Raymond Realty will be listed both on the BSE and NSE, giving investors direct exposure to the company's real estate business. Now, as per the scheme of arrangement that was decided earlier, 6.65 crore shares of Raymond Realty with a face value of 10 rupees per share will be issued to shareholders, and for every share held in the parent company, shareholders will receive 1 share of Raymond Realty. So the ratio is 1:1, aligning with the group's focus on equitable value creation. So that's the news flow. They've received the BSE NSE nod. We can expect this demerger and the Raymond Realty listing to happen soon as well. So on the back of this news flow, the group company Raymond is up 7% as we speak.
Alright, that's Raymond flying high in trade today, trading with gains of 7%. But another counter that's actually up 3.3% is Nalco on the charts. Nilesh, tell us what are you seeing on the charts for Nalco. Last 6 months given good 30-odd%. In fact, last 1 month also it has given 16-odd% returns. Is there more upside for this? Does the upside momentum continue for this?
Very good afternoon to you. Yes, absolutely. If you look at the overall structure, the stock has been in a very strong uptrend, constantly forming a high top and high bottom formation. And in spite of the weakness that we have seen in the market, the stock has in fact outperformed, and it is trading at all-time high levels. Looking at the overall structure, it looks like it is heading towards 270, 280 levels on the upside. So any dip can be used as a buying opportunity, keeping a stop loss below 240. The stock still has a potential to test 270, 280 from a very short-term point of view.
Okay, so that's the view coming in on Nalco. Let's move on. Jain, you've picked out Praj Industries for us. Tell us why you've picked out this stock and what the news flow is over here.
Well, definitely the company has come up with a press release where they are saying that the new opportunity in they are looking at seeing a 3 times jump in their revenue growth by FY30. They are eyeing opportunities in multiple sectors such as sustainable aviation fuel as well as biopolymers and energy transaction and climate actions, and that is why they are targeting a 3x revenue jump by FY30. Now apart from this, they have also set up dedicated advanced manufacturing facility at Mangalore with an investment of roughly about 400 crores. They say that at an optimal sustainable level, this plant can generate revenues up to 2000 to 2500 crores. Also, they are targeting to increase their revenue share, export share, which actually stands at 29% currently, to 50% by FY30. And post this, if you look at the share, currently it is trading about 10% in today's session.
Alright, moving on from Praj Industries to one from the Realty Pack. DLF is the counter that you've picked out for us, Nilesh. DLF, now the entire Realty Pack is doing pretty well in today's trading session, so it's trading with gains of almost 4%. But in the last 1 month, it's seeing a bit of a consolidation. In fact, in the last 6 months, it has been consolidating. So from here on, do you see an uptick coming in on DLF starting today, because today is a good day for DLF?
Absolutely. So today we have seen a good amount of short covering in this particular counter, and if we see the overall structure, no doubt the stock has been consolidating since a long time. So looking at the overall recent development, I think this pullback should extend, and we may see the levels of 830 to 850 from a short-term point of view. So purely from a pullback point of view, I think DLF looks strong, and stop loss can be placed somewhere around 775, and long position can be initiated here for upside target of 830 to 850.
Okay, so that's the view coming in on DLF. Those are the levels to spot. But on that note, we'll slip into a very short break and keep it going with all the big buzzers and the technical check just on the other side of this short break. So you stay tuned. We'll be right back.
Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are in focus today on the back of news flow and the back of technicals. Let's resume then. Tata Power is a counter that is in focus today. It was trading with gains of 2% in early trade, has now given up those gains, but nonetheless still up over 1%. Well, the stock rose because the Tata Power has announced that it has entered into a memorandum of understanding, or MOU, with Asian Development Bank for $4.25 billion to finance key clean energy power projects. The MOU is coinciding with the ongoing climate conference, or the COP29 at Baku, Azerbaijan, to evaluate financing for its several strategic projects aimed at enhancing India's power infrastructure and promoting renewable and clean energy. And on the back of this MOU, Tata Power is up and away 1.5% right now.
Okay, so that's the news flow on why Tata Power is up and away, in fact, in today's trade. Let's talk about another stock from the real estate pack. Now, Nilesh already spoke about DLF on the charts. Let's shift focus and talk about Sobha. That's buzzing on the back of a brokerage note coming in by Investec this morning. They've initiated a buy rating with a target price of 2,150 rupees. They say that Sobha has a late recovery on the real estate cycle, and Sobha has benefited from robust demand and higher realizations in Bengaluru. It has consistently generated a healthy operating cash flow while also reducing the balance sheet leverage, and Sobha plans to strategically enter the Mumbai and Noida markets as well, targeting a strong long-term presence in these markets within the next 2 to 3 years. So on the back of this, Investec is expecting 18% CAGR pre-sales growth over FY24 to FY27. Considering the strong project pipeline that Sobha already has, they say that monetizing its land reserves and using incremental cash flows to expand the joint development business could further enhance profitability for this company. They say that strong project pipeline will drive pre-sales, and the strong execution and inexpensive valuation versus peers is something that Investec is lacking for Sobha. So very positive note coming in. Investec has initiated a buy rating with a target price of 2,150 rupees.
All right, moving on from Sobha to Grasim. Nilesh, you picked up Grasim for us on the charts. Last 6 months it has given around 6% gain. For the last 1 month has seen a consolidation coming in on this counter. From here on, where does the stock go now?
So on the weekly closing basis, it looks like the stock is forming a bullish engulfing candlestick formation after a fall of 2 consecutive weeks now. And on the daily time frame chart, the stock has witnessed a sharp rebound after testing its 200-day exponential moving average. So overall, looking at the setup, it looks like the stock is heading towards its 50-day moving average that is placed at 2680. So from current levels, we can expect a 3-4% kind of upside. So looks good on the chart. One can keep a stop loss below 2540 and long position can be initiated here.
Okay, so those are the levels to watch out for when it comes to Grasim on the charts. But Janai, you picked out L&T for us. The stock is up roughly 2.5% as we speak. I believe it's on the back of a brokerage note coming in. Tell us what the note is and what should we be watching out for when it comes to this stock.
Well, definitely L&T is in focus as we have a note by UBS who are maintaining the neutral rating with target price of 4,000. Now what they believe is that low incremental appetite is there for L&T in terms for Korean ENC to take larger orders in the Middle East. Also, there's a lower risk for Middle East hydrocarbon capex is what they believe. They are reporting the near-term pipeline for L&T is about 10 to 12 billion dollars, US billion dollars. Also, the competition in infra is higher than the competition in hydrocarbons is what they are reporting, and there are some challenges to note according to the company. Now, apart from this, going ahead, the key monitorable will be the domestic infra spends as well as the Middle East execution, which will be in focus. And if you look at the stock, currently is trading over 2%.
All right, coming to you, Nilesh, then Indigo is what you have picked out for us as an interglobe aviation, which has been in a strong consolidation mode in the last 1 month. It's down almost 8.5%. Tell us, do you see this counter now start moving up?
Has witnessed 5 weeks of decline, and now on this week's perspective, it is forming a big bullish candle on the weekly chart. As well as it has also reclaimed its 200-day the major resistance zone. So overall, it looks like the stock is forming a nice base formation, and we can expect this stock to make an attempt to fill the gap that we saw on 28th of October. So from here, we can expect the counter to move towards 4,300 to 4,400. So this pullback can be played keeping a stop loss below 4,050, and the upside may extend towards 4,300 to 4,400.
All right, moving on to the next counter, we are talking about Crompton Greaves that is in focus today. It was, in fact, the stock was trading with gains of over 2%. It's trading with gains of almost 2.5% right now, and it is coming on the back of the fact that they have they've launched a new product which is storage water heater in the storage water heater category, and it's a new launch that will be launching pan India, and on the back of this new launch, Crompton Greaves is up and away at 2.5% right now.
Okay, so positive news for Crompton as well. And Nilesh, coming to you now, you picked out Piramal Enterprises on the charts. Now, this is a stock that we don't very frequently discuss on the show. It has not made it to a lot of analysts' radar. Tell us why this stock is exciting to you. What is your outlook when it comes to the levels that one must watch out for when it comes to Piramal Enterprises?
Alright, so there are multiple reasons for that. First of all, if you just pull up its 2.5 year chart, you can clearly see on the weekly time frame chart the stock has faced resistance at its 1140 level. So that's kind of a triple top formation that we have seen in this particular stock. Now, good part is that recently the stock witnessed somewhat of consolidation, and it was trading in a falling channel from past 2 to 3 weeks now. So overall, the counter is making an attempt to break from this particular falling channel, and we are preempting that going forward it will break that 1140 barrier as well. So from a position point of view, I think it's good time to accumulate this particular counter for a position target of 1250 to 1300. So that's the position view. From a trading perspective, from a very short term point of view, I think the stock has a potential to test 1140, 1150 kind of levels. So to play that kind of move, one can keep a stop loss below 1050. The stock has recently reclaimed its 50 DMA as well. Good volume activity we have seen, and good amount of short covering rally was also seen. So overall, within NBFC space, this particular stock has outperformed, and we believe that going forward, it is likely to break the levels of 1140 as well.
That's the call coming in on Piramal Enterprises accumulate with a target of 1250 to 1300. But let's move on, talk about yet another high flyer in today's trade, and that is Info Edge. On the back of a brokerage note, you have Goldman Sachs that has upgraded the stock to a buy rating from a sell rating. So it's a big upgrade coming in. They've also hiked the target price to 8,600 rupees. Now they say that they believe the demand environment for Indian IT is incrementally improving, and they expect this to drive an acceleration in Info Edge's recruitment segment revenues to 16% over the FY25 to FY28 CAGR versus 8% that we had seen over FY23 to FY25. Within this other segment, they continue to expect a robust 20% plus revenue growth outlook for 99acres. They also believe a combination of scale and stable competitive intensity should help it achieve the break-even in calendar year 25. Additionally, they remain bullish on Zomato, which makes up 33% of Info Edge's market cap, and see upside risk to both estimate and multiples for the company. And to reflect these, they have raised their estimates, changed in the valuation framework, and have upgraded the stock to a buy from a sell rating with a revised 12-month SOTP based target price of 8,600, which was earlier just 5,700. So that's implying a 14% potential upside. Big jump in target price, also a big change in the rating coming in. Very positive note coming in for Info Edge from Goldman Sachs today.
Alright, with that, it's time for a quick breather. Don't go anywhere. After the break, we're getting you lots more stocks that are in focus today. Stay tuned.